Welcome back to my InvestEngine portfolio update here, where I go through every single month what's been happening inside of my stocks and shares ISA with you and share all of the gory details. Another month has gone by very, very quickly in the stock market. I think it's fair to say this month really not a huge amount has happened. It's been fairly flat. I'll put that up on screen now for you, at least from an S&P 500 perspective. We have seen a few fairly volatile days. You would have seen a few different tech stocks in certain days go up quite high, make some big jumps, especially with the likes of Tesla, Microsoft, Google, Amazon, etc. But then equally, you would have seen some quite negative days. In fact, just a couple of days ago, in fact yesterday, depending on when I actually upload this video to YouTube, you would have seen that the market had had a bit of a sell-off at the moment. Some definite fears around inflation creeping back into the US market at least. A couple of reasons there. You've got oil prices surging up just a little bit, and that will eventually feed through to all the different prices that we have at the moment. I think it's fair to say at the moment that people are quite jittery still when it comes to interest rates and inflation. Inflation still remains a very hot topic, even though in the US it's remained pretty much under control. I think it's fair to say they've got the things under control a lot better compared to here in the UK and the rest of Europe. But again, as a long-term investor, it's not something I concern myself too much with. It's just making sure that you don't make too many reactions to that news as it comes out. Now, just staying on all of the stock market news, one more thing I'll cover just before I go into my portfolio live is that September in the stock market tends to be some of the worst performance that you're ever going to get in any kind of calendar year. Now, I did make a video of this, I think last year or the year before, and I went into all the details. Now, anything can happen in the stock market month to month, year to year, but on average, if you look at the performance, and I'll get this up on screen for you now, that the stock market has performed typically worse in September, and the average has been nearly minus 0.75%, which is quite interesting. Does that mean that this September we're going into is now going to be just kind of red and heading all the way down? Nobody knows, but that is certainly an average. It's quite interesting to see how those averages play out. On a positive note, after that, we do tend to get a bit of a rally toward the end of the year, and you may have heard that term, the Santa rally as well. Lots of people get quite excited. I guess they stay quite optimistic and then tend to invest more of their money while they're also buying presents at the same time. Now, as usual with all kind of news and little stats and tidbits like this, it's just important to know that the market can work like this. It doesn't mean that it has to for the month of September, and it certainly doesn't mean that I would change any of my investing behaviors. Just something to pay attention to, and we'll see how this plays out in the next month, and maybe we'll look at it in the next portfolio update. Anyway, on that note, let's jump straight into the portfolio, which I'll share now live on screen. And as another month has gone in, I've put my £1,000 in, which is my regular direct debit that I have set up with InvestEngine. I have set up now with the savings plan that gets automatically invested every single month. And quite a nice psychological barrier this month, as we are so far already into the year, is there is £10,000 now in the account and £355 worth of gains, as you can see here. As you can see, the longer you invest makes things more interesting, at least to look at from a graph perspective here. You can see the blue lines are every time I've invested money into the account. The little black dots are where I've made the investments, which are done automatically. And then the green lines are, of course, the different changes that we've got up and down as the value of the stock market changes, as it does every single day. Now, just going into the individual investments, now regular viewers will know this account very well. It's made up of just 4 simple ETFs, as you can see here. They're all Vanguard ETFs. These are the ones I've chosen. The InvestEngine platform has got hundreds of different ETFs to choose from, so please make sure you do all of your own research. As always, I'm not a professional financial advisor, so please do your own research and make sure you understand what you're investing in. Now, the reason I went with these 4 specifically is I wanted to create basically a very, very simple global ETF portfolio that pretty much matches the market weights of the world. So the bigger the companies and the bigger the region is where more money goes to. So for example, with the S&P 500 with VUAG, this fund, I put 58% there. FTSE Developed Europe, I've put 20%. The emerging markets, I've put 15%. And then the FTSE 100, I've slightly overweighted a little bit to 7%. So those are the weightings that I've been going for. There are some parts of the world which you do miss out from here, but it's not something I'm too concerned with at the moment. And you can always chop and change and make those amendments. As always, I do actually share the portfolio, so you can have a look in the description. I will leave a link there for you to actually have a look at this portfolio. And just on that note, if I go back into my account, I also share another portfolio. Again, I'll leave a link in the description for you with a single fund, one that you might want to look at. If you wanted to have a single fund portfolio that invested in the entire world, this one is a good choice from my perspective, Vanguard FTSE All World Fund, which trades under VWRP. Again, do all your own research, make sure you find what's right for you. Investing, as always, is a personal decision, but this could be one for you, and I do leave that link in the description below. Now, one thing worth touching on is to remember that all of this is inside a stocks and shares ISA. I know that might be obvious because I put that in the title of the video, but it is really, really important to remember that everything inside this account is going to be tax-free. That's tax-free, protected from dividends and capital gains. So for example, over the next 10 or 20 years, if you keep regularly contributing to this with those limits of £20,000, which you are get at the moment by the government, which you can check on the government's website, this will then grow and grow and grow and grow tax-free. Now, one of the best things about that is when you withdraw that money, there'll be no income taxes to pay as well, which would be really, really nice. So hopefully this will be something quite nice to have, especially when it comes to retiring. Now, if you do want to open your own stocks and shares ISA, don't forget to check the link in the description below. You can actually get £25 if you deposit £100 into a new account with InvestEngine. Terms and conditions do apply, so make sure you check all those out. But nothing better than free money, in my view. And also a huge thank you to all the people that do use that link and sign up. It does really help support the channel as well. Now, in terms of performances, you can see that the account is pretty much being carried at the moment by the S&P 500. This is because there's a handful of companies at the moment who've all been kind of fueled by this artificial intelligence boom that's been going on at the moment. Now, if you actually look at the entire stock market, or at least the S&P 500, you'll see that it's just a few sectors, and it really is that technology sector which is kind of booming at the moment, whereas lots of other sectors are suffering. But anyway, this is keeping things afloat at the moment, and actually, because it's the largest weight in the account, is why the actual gains are coming from this direction. Now, the rest of the funds make up a smaller proportion, so actually their fluctuations don't matter as much. But developed Europe has pretty much stayed flat. FTSE emerging markets again has been pretty flat. As always, you can see the little black dots where I've made those investments, and you can see, yeah, it's been going up and down like the most of the market, but really it's been relatively flat. And the worst performer at the moment is the FTSE 100, which is going for a bit of a tough time at the moment here with the UK economy the way it is. As you can see here in my purchases, again, not a huge amount has happened. This index does tend to pay a little bit more dividends, so in VUKG, this does actually automatically invest those dividends for you in the background. It's an accumulation fund, but there's not a huge amount of capital growth going on at the moment. So where does this one go in the long term? Who knows? But it only makes up a very small portion of the account, so it's nothing I'm too concerned with. Now, I know in these portfolio updates, I can repeat myself a lot by saying, you know, I'm a long-term investor, I don't really care about these fluctuations, but it is something I genuinely feel, and I do like to remind people a lot of these times. I think especially if you're a newer investor and you're seeing these red things in the market, you may then get put off and you stop investing, but really, these are the good times, in my view, to actually make sure that you invest as a long-term investor. If you do want to be a successful long-term investor, in my view, you do need to make sure that you regularly invest throughout the good times and the bad times. I think we all know over the past few years, at least 2020 and 2021, if you were invested in the market, you were having a great time and seemingly everything was green, only going on the way up. And as an investor, it's extremely easy to do that when things are only going up. You've got nothing to worry about. All you have there is the fear of missing out as things only went up and you wish you put more in. Then we had 2022 and the markets were going down. A lot more people were a lot more cautious. I certainly saw this in my comment section. People concerned, asking if it's a good time to invest, for example. But actually, really, the people that have done the best out of this are people that just stayed the course and continue to invest throughout that period. Again, especially if you're a long-term investor and all you care about is wealth over the long term. Remember that those purchases that you make when the stock market is low give you that lower average price as that market creeps up over the long term. But again, only works in that long term. As always, anything can and does happen, certainly in the short term when it comes to the stock market. And it's why I actually really enjoy making these portfolio updates, because I can have a look and show you what it's like being an investor. Now, many of you have only been investing maybe for a couple of years, or even some of you just a few months. So you will see these fluctuations go up and down, and it can be quite challenging mentally thinking if you've made the right decision. But really, you have to trust that process over that long period of time. And you have to take the red days and certainly the down days as well as the good days. And there's going to be plenty of both as we head into the next few years. Anyway, I hope you've enjoyed that update. I'll leave the rest of my portfolio playlist up on screen now where you can go through all of my different portfolio updates. I'll see you in the next video. As always, happy investing.